The accounting rules have a whole lot of details, more so under GAAP, but also to some extent under IFRS. Even in light of all those rules, there is still a lot of judgment that management must use in accounting for transactions. Many accounting entries are simple based on the nature of the transaction, while others require management to make a judgment about that transaction, about the accounting rules, and what the resulting accounting entry may be. The judgment of management creates a lot of risk related to financial statement fraud. For a retail store, it's simple to see that when a customer makes a purchase, a sale should be recorded. With a long-term service contract, it's more complicated. Management has to make a judgment about how and when to recognize the revenue and the associated costs. There's a greater chance for abuse when management has to make those judgment calls. Some common instances which involve management's judgment in recording transactions include the selection and application of a depreciation method, the selection and application of an inventory valuation method, changes to a depreciation method, changes to useful lives or estimates of salvage value of assets, calculation of the allowance for uncollectible accounts receivable, determination of asset impairment and calculation of related reserves, calculation of the reserve for obsolete inventory, determining whether an investment has become temporarily or permanently impaired and calculating the write-down, and determining the value of goodwill and calculating write-downs to goodwill. Management is going to have a tendency to apply judgment in a way that tends to improve the financial statement. However, it's not uncommon for the opposite to occur. Management can also exercise judgment in a way that will temporarily make the financial statements look worse. So, for example, if the company is already booking a large charge related to a downsizing or restructuring, it may be advantageous for them to recognize a larger charge than is actually necessary so that the reserve can be used as a cookie jar in later periods to improve those financial statements.